What I basically want to address this morning are the principal issues that we see clients dealing with, which would number one be the sales and use tax. And the reason I put sales and use tax first is because it's possible to be subject to the sales and use tax in the district, and I'll be even more clear because I don't know if everybody understands the difference between a sales and a use tax. A sales tax occurs if you were to go downstairs and buy at the sandwich shop a sandwich or an omelet this morning for breakfast or a bagel for breakfast or a cup of coffee at Starbucks on the corner. That's where a sales tax is assessed. And in the district, you have two different sales tax rates, even though Stephen talked about the 6%. The 6% applies basically on non-food types of items. So if you were to go downstairs and buy a bagel or a sandwich for lunch, that would be subject to 10%. Use tax occurs whenever you have a transaction that is a good that is purchased by a resident or someone who is doing business in the district, even though you as a seller may not be in the district. For example, in this general area, let's say that you have a business that is in Northern Virginia, but it is selling taxable goods into customers in the district. Well, the question for that particular individual or that particular merchant is, do I have nexus with the District of Columbia? So nexus is a significant issue with respect to sales and use tax. And if you do have nexus as a non-DC based taxpayer, then the question is, do I have an obligation to collect? The use depends upon their activities in the district. Do they have employees who are in the district? Do they lease or own office space in the district? Do they use a common carrier to transport the goods? Common carrier is basically like FedEx, UPS, the mail. Do they use a private, independent, unrelated third party to bring the goods in, or do they use their own vehicles? Do they use their own trucks and cars and employees driving those cars to transport the goods from, in this case, Northern Virginia, suburban Maryland works as well, into the district for delivery? If the answer to that is yes, well then, odds are you will have nexus. Nexus is not, even though for sales and use tax purposes, the Supreme Court, there is jurisprudence that would say that it is a bright line physical presence test. Stephen will tell you that's not necessarily always such a bright line. So the point I'm trying to make here is sales and use tax is generally a bigger issue that I see our clients have, especially clients who are not based in the district. If you're based in the district, then it's a fait accompli. You have physical presence and you'll have a sales tax collection obligation. The reason that sales tax and or use tax, they're complementary, are such a big issue is because it's based upon the total taxable sale. And so in this case, if back to the example, I sell a good for, I used a $6 sandwich a minute ago, that $6 is the base for the sales tax. Now, contrast that with the franchise tax, which is a net income tax. The profit that I make on that $6 sale is not $6. I have costs that are involved in that. I have overhead in terms of what I'm charging, or in terms of what I'm paying the individuals who made it, what I have to pay to my landlord, all other sorts of costs go into that. And so my profit margin may be on that $6 sandwich, may be 50 or so cents, somewhere around 10%. That's what I'm going to be paying the franchise tax on. The issue with the sales tax is it can be a much bigger exposure from a dollar perspective. And so that's why I wanted to start with the sales and use tax so that you understood there could be quite a bit of exposure there. Whereas with the franchise tax, for example, if you're not profitable, you don't have a franchise tax issue. Whereas you may not be profitable, but you're still making sales, you have a sales and use tax issue if you have nexus with the district. And so I wanted to make you aware of that. Also, in Stephen's presentation, he mentioned the changes with respect to sales and use tax reporting. You have a monthly return that is due. If you don't have sales of a certain level, then it's an annual return. But you have monthly returns that are due on the 20th day of the next month. So in this case, we're coming up on December 20th, which means that the November sales tax returns are going to be due in less than a week or so with respect to the DC sales tax. Nexus is different for franchise tax purposes. It is possible to have nexus for sales and use tax purposes, but not nexus for franchise tax purposes. And this generally comes into play when you have someone who is not DC based. And so the example that we oftentimes see is, say that you have someone who is in Northern Virginia or someone who's in suburban Maryland, but they're doing business in the district. Well, doing business is a loaded word. I can be doing business but not necessarily have nexus for franchise tax purposes. I can also be doing business in the district but not have nexus because I don't have a physical presence in the district. I could be shipping goods using a common carrier into the district, and I have no presence whatsoever, and I don't have nexus, arguably, for sales and use tax purposes, but I could possibly have nexus for franchise tax purposes. So they're not the same, and so that's a calculation that you unfortunately have to take into account and weigh. The other point with respect to nexus is I have this reference to public law number 86-272. I don't want to get too technical with you about some of the constitutional issues, but that's a federal law passed by Congress that basically says to all states, not just the District of Columbia, even though the district is not technically a state, it is for purposes of this law, that the federal government has said, look, or Congress has said, states cannot impose unnecessary constraints on commercial, interstate commerce within an income tax context. And so we're going to provide certain safe harbors that businesses can do across borders and not be subject to an income tax or a franchise tax that's based upon net income in the other jurisdiction. So for example, let's take someone who is based in Rockville, was the example that Stephen gave. So if you have someone who is in Rockville and their only activities that they have in the district physically are sales-related activities, so they're sending someone from their home in Rockville into the district to make calls upon different customers. That, under 8672, is protected activity. So the district would not be able to say that we have nexus for franchise tax purposes, but the district would say, well, but you're sending someone, you're sending an employee or even an independent contractor into the district to make customer calls for the purposes of generating a market. You have physical presence through that individual in the district. So all of your sales are subject to the DC use tax, because even though you're not in the district physically, you're selling into the district, you have nexus, and so therefore you have a use tax obligation. So that hopefully is an example to where it's not, they don't always follow in perfect unity between sales and use tax and franchise tax, unincorporated business franchise tax. And there the point is, a lot of our clients who are limited liability companies, and I know you've talked about choice of entity issues, and choice of entity is addressed in this book as well. Whether they be LLCs that are ignored for federal tax purposes, disregarded, which means that for federal tax purposes, you don't file a separate return for the LLC, or whether or not they're a partnership, which means that for federal purposes, and oftentimes in many states, that is not subject to an entity level tax. Or they could be an S corporation. LLCs can make an election to be an S corporation. So LLCs are the most common vehicle that people are using from a state law perspective to do business, because LLCs can basically be anything depending upon the ownership for tax purposes. You don't have to be a state law corporation in order to be an S corporation for federal tax purposes. You can be a state law LLC just like the C Corp, or just like the corporation, and make the election to be treated as an S corporation. But the point is, a lot of our clients are surprised that for federal tax purposes, they file their partnership return, their S corporation return, pay no tax because it's a tax reporting entity, not a tax paying. But in the district, there is the franchise tax that applies an entity level tax to those particular entities. So an entity that is disregarded, a single member LLC, tax nothing, you might have heard people refer to it, it's subject to the unincorporated business franchise tax. The point I'm trying to make, S corps, partnerships, and disregarded entities, things that are not taxpayers at the federal level and things that are not true taxpayers in most other states, are subject to an entity level franchise tax. If you have employees in the district, be mindful of registering for payroll taxes, and by that you also have to deal with the withholding, which is what Stephen has addressed, but you also have to deal with unemployment taxes and things of that nature as well, so don't forget to do that. The final thing that I wanted to deal with deals with more regulatory issues, and the first one would be there is a combined business tax registration form to where you can register for any and all of these taxes. I really hit the big three in my view: sales and use tax, franchise tax, and then payroll taxes. There are other taxes, and Stephen has addressed some of those.